today's podcast for GCC-based investors. I'm Amber Furr, Head of Marketing Middle East, and I'm here today with Hamish McAllister, Senior UK Property Consultant. So thanks so much for joining me today, Hamish.
Absolute pleasure. It's great to be here, Amber.
So there's no denying that globally, investors have been navigating a period of uncertainty, from shifting geopolitics to fluctuating markets. And I think understandably, GCC investors all seem to be asking the same question. How do I protect and preserve capital while still creating long-term growth? So what are some of the key focus areas or factors that GCC investors can consider to protect and preserve their capital?
So there's a few key points that we want to be looking out for. Of course, stability, consistency, diversification, long-term thinking as well. And to really kind of bolster these points. So consistency is one of the biggest things that we're looking out for at the moment. We are seeing a lot of inconsistencies within the markets at the moment, particularly within the GCC. So looking at the UK markets, we know they are performing at a certain level. You look at Manchester, for instance, we're looking at least 4% capital growth per year, and it's been performing that for the last 5 years. And we're looking at that to be even higher over the next 5 years as well. But at least we know what we're getting. Same with rental yields as well. We know what we expect to get. Generally, looking at Manchester and Birmingham, we're looking at between 6 and 8%, which are really fantastic, consistent yields to be getting. Diversification is key, of course. But again, not diversification for replacing assets, but for helping mitigate risk amongst your portfolio. And I think it's really important, particularly when looking at the UK. There are so many places you can look at investing. Manchester and Birmingham are sort of the two highest performing and sort of the best yielding cities right now. And having, let's say investments here in Dubai, as well as investments in Birmingham and Manchester, I think you set yourself up for success rather than failure by having investments in these cities. Long-term planning. When we look at the UK, we don't look at this as a short-term gain, it's a long-term gain. So we're doing this for creating generational wealth, putting this aside for our kids, our grandkids in 10 or 15 years' time to create a bit of legacy for yourself as well. And it's something that you can really hand down to the next generation. And that's really important when investing in the UK. And again, of course, the stability. Stability is so key right now with everything going on. The stable markets within the UK, it's the oldest market in the world. And you can't go wrong by investing into it.
Okay, so you mentioned some really key factors there of what's underpinning GCC investment into the UK market. Are we seeing any new trends emerge, or are we seeing an increase of investment with all the current tensions going on?
Well, I have to say, we're looking at the last 5 years, we've had nearly £100 million worth of investment from GCC investors with us currently. And we don't see that slowing down. I think given right now with the instability in the region, the UK, we keep coming back to the UK as the stability that we need within our property portfolios. That's down to a few things. Of course, the supply and demand issue, which is, I think, a real key and defining factor, particularly when you look at places like Manchester and Birmingham. The supply just cannot meet the demand.
Yeah.
There's a huge young population who's driving this demand at the moment. We have over 100,000 students in Manchester alone who are staying on within the city in high-paying jobs, and who are very much after amenity-rich accommodation. The legal framework as well. The legal framework works very well. And what I mean by that is the way the taxation system works. Yes, you might say there's taxes involved here and we have to pay these things, but because of that, it means that we have a stable growth system, that we know that we're getting 4% a year or 6% a year, compared to, let's say, other areas and locations within the world where we see huge fluctuations within rises and also huge downfalls as well. Currency factors as well. I think this really plays a big part, particularly at the moment, and people are really looking to, of course, keep liquidity, but I think safeguard some of that liquidity as well by mitigating a risk and putting 20-30% into properties within the UK, because it is still seen as one of the best investments you can do when it comes to property.
Absolutely. And how important are those flexible payment structures for people at the moment, especially?
So important. Every call, every meeting I'm having at the moment with my clients, it's crucial. And it's one of the defining factors of why we're having so many investors come on board at the moment, because we're really listening to what people are saying. Our ear is to the ground that people need to safeguard their liquidity. So right now we have a fantastic opportunity in our newest development, which we're launching, called Vita Living Circle Square North, after the back of a success of our sister building that we sold last year. But the reason why it was a success, and I think particularly why the new building will be, is we are doing a 10% down payment with a completion then in July of next year. So it gives investors time to input a little bit of capital now, but more importantly, when they're coming to completion, we're having a lot more talks with our investors about leveraging their capital. Not putting all your eggs in one basket is the saying, putting them in a few different baskets, particularly within Manchester and Birmingham, where we do something into a payment plan, off plan, we have something ready and we mortgage it. Because I just think right now it gives, I think, people a lot more confidence to do so. The yields are paying more than paying the mortgage rates as well. Mortgage rates are low within the UK, and the Bank of England is holding strong, especially during these turbulent times. So it's really strengthening our position as one of the sort of better places to invest when putting your money into property.
And I think what's quite unique about Vita Living Circle Square North is that, of course, it's complete, so tenanted, achieved yields, but with the benefit of that off-plan payment structure.
Absolutely. I mean, the security you get in that alone is amazing. And I think that is why it's been such a well-sold development. As soon as you complete on that purchase, you are getting rent from day one. You're not having to go out and buy furniture packs. This is fully furnished. It has a tenant ready to go. With a 98% occupancy rate, which is incredible, and really high retention rates of around 75%. And I actually was shown a fact recently about a lot of the tenancies that we have in this building, that every tenant will renew 3 times. So it shows you the confidence they have in us and the confidence they have in the building as well. So it's a really fantastic opportunity for investors for dipping their toe in the water in the UK market for the first time.
Okay, great. And obviously this development has been hugely popular, especially in the GCC. What do you think it is about the development and this opportunity that attracts GCC investment in particular?
Great question. I think my honest opinion is it's down to the universities and the name that Manchester is. Of course, it has a huge football following as well. But I think one of the main reasons is of course, the university town. I speak to a lot of investors who come on board with us, and they actually went to university in Manchester. They went to university in Leeds. They know the city well. The location, I think, is also such a key defining factor of why this is such a good investment opportunity. Right in the heart of the education hub of Manchester on the Oxford Road corridor. For GCC investors, let's say sending their kids to university, they're living in that apartment. They know in 10 minutes they can walk to the train station, they can get a train straight to Manchester Airport. And 6 hours later, they'll be in Dubai. So they have the confidence knowing that they can get to their kids quickly, their kids can come to them quickly as well. Yeah. And that's also why it makes such a good investment opportunity as well, because generally a lot of parents and investors are paying huge sums of money for their kids in rent. £20,000-30,000 a year over the course of 5 years. It's a lot of money, where actually that money could be better spent putting it into a property. You've got a great down payment there, and at least something to secure for your children's future as well, if you so wish. So I think Manchester really gives that confidence because of the universities, how well known it is on the map, becoming the UK's second city.
Okay, great. And your clients that you have, I know you just talked there about quite a typical demographic being a parent of somebody that's going to university in Manchester. What's another kind of typical investor demographic that you would see? What's your kind of typical client? I
see quite a similar amount of clients who are very similar backgrounds, who are generally working for conglomerate companies like PwC, Deloitte. We have who generally come on board with us because they are very familiar with the UK market. They are familiar because their companies are based there. They have their head offices there. Generally, we will have a lot of our investors from Dubai who might not actually necessarily be from the GCC. They might be from outside. A lot of them are expats, but they have the confidence of knowing the Manchester market. So generally, demographic of clients that we have are working investors who are generally working in these conglomerate banks and companies like PwC, Deloitte, even Goldman Sachs and Deutsche Bank.
And what's most important to them when they invest, would you say?
I think the most important thing for these investors really, and it always boils down to one thing, is something to give their kids and their grandkids at the end of the day. And I understand people say, we wanted to do this for really great yields and really great growth. And of course, that's what we all do it for. But really, it boils down to it. It's something to hand down to their children at the end of the day and leave a bit of legacy for themselves as well.
Okay, and a barrier for some GCC investors might be the thought of investing from overseas. How does Select Property make that process easier for an overseas investor?
Great question. And it's quite a common thing that when I speak to investors who are looking at the UK for the first time, they were clueless about it. They had no idea that it's actually really easy to invest in the UK and anyone can invest in the UK. So the way we work is a full end-to-end service, so just completely hands-off and hassle-free, taking you through the entire buying process and having your specific consultant who will be holding your hand through the whole process, to then investor services who will then take you through the next stages, to then, of course, purchasing your property and completing. But then the next part of the journey is, of course, the management of your property, the renting of it, achieving the high yields that we do. We have a management company set up called Select Residential, who are our guys on the ground who are doing the active marketing, the renting of your property, trying to achieve the highest yields for you as well. And of course, keeping the tenants happy at the end of the day, so that you don't have to have any dealings with this at all. We take this completely from you, from end to end. And let's say in 10 years' time, you're looking to then sell, that will be there to jump back in for you and sell the property on your behalf as well. And I think that's the sort of service that I think we do very well at, and kind of really sets us apart within the industry as well as the region as well.
Absolutely. And I think, across all of our global offices, so we now have an office in Manchester, Dubai, Shanghai, Hong Kong, Riyadh, who knows where next. But I think, it is really remarkable to be able to offer that true bilingual, focused, dedicated support.
Yeah, I completely agree. Having the bilingual side of things as well, Arabic speakers, Cantonese speakers, whoever it might be, we have the team in place to help that investor out. And I think that's what really, really sets us apart. And yeah, it's exciting. We're growing at a great rate. There's a huge want and need for the UK property market, and we are, one of the biggest independent UK developers. So we're in a great position, and I can only see it getting bigger and better for us all.
Thanks, Hamish. And finally, what would be one takeaway piece of advice for clients or investors considering the UK right now?
I think the main thing is pick up the phone and have a conversation, because you never know, no matter, you might think, I don't have enough money to invest in it, or I don't know enough about it. The idea is that we're there to have a conversation, and we're consultants at the end of the day. We want to get to know you and see where we can add value to what you're looking to do. So the best thing to do is really to, message us directly, call in, and we'll be happy to sit and answer all of your questions and give you the best advice that we can do.
Perfect. Thank you so much, Hamish. I think that was a really valuable conversation that I'm sure our viewers would have found really engaging. So thank you so much for joining.
No, thank you so much. And it was great to hopefully give some insight on how the UK property market works.
And to everybody watching, thank you for joining us. You can subscribe on YouTube and get in touch with our Dubai or Riyadh sales team anytime.